Get Rich Education is brought to you by Norada Real Estate, the Real Asset Investor, and Highlands Residential Mortgage.
Are you having a hard time finding great investment properties? Unfortunately, the best deals are rarely found locally. Successful investing begins with the right properties in the right markets. Norada Real Estate provides everything you need to invest in the best deals across the U.S. Our simple, proven system will help you create real wealth and passive monthly cash flow. Get your free copy of the ultimate guide to passive real estate investing at noradarealestate.com/guide. That's NORADA realestate.com/guide.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to GRE, Get Rich Education, episode 129. Hi, I'm your host, Keith Weinhold, back with you for another wealth building week. Today, it's about building your portfolio in one of the hottest real estate markets in the United States, and it's a real estate market that just doesn't show any signs of letting up. That is the Dallas-Fort Worth metro in Texas. In fact, there's a good chance that you know someone that's moved to Texas. I've got numerous friends myself that I grew up with that have moved to Texas, and when they move there, they don't leave either. They stay. That's what we're talking about today. And then as far as the next three episodes, we've got some of really the most seasoned and esteemed real estate investing and finance teachers on the planet. Next week, America's Money Answers man, Jordan Goodman, will be here. You've been hearing Jordan give you money answers on terrestrial radio nationwide for decades. I can't wait to talk to him. The week after that, we've got the return of, well, really one of the most famous real estate investors in the nation. That is the Rich Dad Advisor for Real Estate, Ken McElroy, making his third appearance here on the show. And then down the road, Rich Dad Tax Advisor Tom Wheelwright returns to GRE here for the record sixth time, where we're going to talk about how a real estate investor can be 100% tax-free. And Tom is also my personal tax advisor. As for today's show, we've just recorded it, and I have to apologize to you because we do have some audio bumps later in the show, but that does nothing to diminish some great content today, and it's material that's also highly actionable for you. Now, a few shows ago, we had geopolitical strategist Peter Zeihan here on the show, and Peter and I were talking about the economic climate in the state of Texas. What about, Peter, the big Texas juggernaut? Let's talk about Texas, where you have business-friendly tax incentives, a big influx of people, no state income tax, a low cost of living, a fairly central location. What do you have to say about Texas and Texas's future economic fortunes?
The Texas Triangle, and that's the area that links together Dallas-Fort Worth, Greater Houston, and San Antonio. It has almost 20 million people living in the urban centers, and about half of the remaining population of Texas is within the Triangle. You've got good infrastructure, you've got low cost of living, you've got low wage cost for both low and medium and high skilled workers. It is definitely the most economically successful region for the last 20 years. Assuming that NAFTA continues in more or less its current form, it will be the most successful economically viable portion of the United States for at least the next 20 to come.
Yeah, wow. And Peter is not a real estate guy. He's a geopolitical strategist that works for international intelligence companies, and he has this broad, connected macro view on government policy and demographics and commerce and trade across all world geographies. And for a long-term buy-and-hold real estate investor, you couldn't possibly hear anything much better than that. Every single day, more than 400 people move to the Dallas-Fort Worth area. That's every day. Growth is expected to average 250,000 people added every year to DFW, so that now you already have a metro population of 7.5 million, and that's a 13% growth just from 6 years ago. Just staggering. And its growth is spread across multiple business sectors. You've got 21 Fortune 500 companies, all there from AT&T, ExxonMobil, to the major airlines, to financial companies. In fact, Forbes magazine named the number one place to invest in 2017 as Dallas, Texas. Well, you've got to ask yourself how you can best grab a piece of that growth without having to live there, and how to do it with the vehicle of real estate, that vehicle that's made more ordinary people wealthy than anything else. What would be the wisest approach for you? Well, let's look at some approaches, okay? It's substantially harder to get 5+ unit apartment building loans if you live in a state other than where you're investing. That's one reason that out-of-state turnkey single-family homes are so popular. With single-family homes, you're also able to get longer-term loans than you can with multifamily, and that's a really good thing when interest rates are rising. With single-family, you can lock in a low rate for 3 decades. Now, like some people, you might ask yourself this question. You're like, but yeah, how in the heck am I going to achieve financial freedom with single-family homes when each home might only provide me with, say, $100 to $300 of monthly cash flow? Okay, you're adding it up and you're like, even at $300 of monthly cash flow, I'd need 25 single-family homes to get to $7,500 a month in passive income for myself. Well, the answer to that question lies in 2 words: leveraged equity. Okay, that's what often makes the difference. And Dallas-Fort Worth has got to be that market where more people expect long-term stable equity growth than anywhere else. Certainly no guarantees, of course, but see, the one single-family property you buy for cash flow, that will not set you free on its own. But what you've done is you've planted an equity seed when you put a 20% down payment on that property. Okay, real estate, just over the long term and nationally, has a historic appreciation rate of 6%. Okay, well, 6% appreciation compounded over a period of 5 years means that your amount of skin in the game in the form of your down payment, that just tripled in equity size when you combine the leverage equity growth with the portion of the principal that the tenant has simultaneously paid down for you. So once you plant that equity seed, historically, you triple your equity position in just 5 years through the power of leverage, because you got the appreciated return on both your down payment and the 80% that you borrowed from the bank. The returns on both of those are yours. So if your equity seed triples in 5 years, you're going to wish that you had planted it sooner rather than later, at which time you can do a cash out refinance or a 1031 exchange into more single-family homes or your first apartment building. So you're kind of able to get this snowball rolling and build this thing faster than you had imagined due to leveraged equity growth and planting that seed early. So like I've said before, compound interest growth is lame. It's not a wealth producer. It's leveraged growth that puts you on the path to freedom. And instead of getting into the nuance of the numbers of that tripling in 5 years, I linked you to a short article where I wrote about that for Rich Dad. That's here in the show notes for you. Now, consider that in your single-family home investment loans too, or in the 1 to 4 unit spaces it might be, you can do up to 10 loans at those best financing terms until you're Fannie Freddie'd out, until you're maxed out. Well, then your strategy is that you would likely rather get more loans on properties with higher values than properties with lower values if you want to amplify your total amount leveraged and build your wealth if you think that DFW is going to keep appreciating. So you just want to get those equity seeds planted a while to potentially get leverage in an equity growth market, just like in this example where you've tripled your amount invested in 5 years. And by the way, that tripling, that doesn't even include any cash flow or your tax advantages or your inflation hedging benefits that you get when you tie up long-term fixed interest rate debt. Dallas is also one of the markets where rent increases stick better over time than they do in most markets due to the torrid job growth that you have there, where they're often getting year-over-year rent amount increases of 5%. And that's an increase that you just can't make stick in some other markets. Now, I'm really big on you living your life. Don't be a house fixer. Don't be a house flipper. Don't be a landlord. Buy from a reputable provider that's already in an investor advantage market like Dallas, where that provider works on a turnkey model. They have economies of scale where they rehab the property for you, put a tenant in it, and then they sell it to you, where you expect it to cash flow from day one as the investor. And they also have in-house management for the long term. In a hot market like Dallas, where property inventory is ultra competitive, you want a relationship with people in that market that can get inventory for you that are at the front of the line that you would have had to wait in. Today's guest has helped grow his company into one of the best turnkey real estate providers in the entire country. His company is a leader in single-family rental property, and they're right there in Dallas. Let's meet him. I'd like to welcome to Get Rich Education, American Real Estate Investments Managing Director, John Larson. How you doing, John?
I'm great, Keith. Thanks for having me.
Yeah, it's great having you here. It's been about 3 months there since I was visiting you, and I got more familiar with some of the key people in your office, and I toured your offices, and we visited a few distinct submarkets, and I saw your contractor crews at work, that you had homes there in various stages of renovation. So, before we talk about that, let's just pull back big picture, John. Just tell us a little bit about really why you are in Dallas and the strength of the Dallas market and the job growth and the increase in property values and rents. Tell us more.
Well, yeah, it would be all those things that you just touched on. More specifically, jobs. I basically follow jobs. Where are all the jobs going? And that usually means that's where all the people are going too, right? With rental properties specifically, obviously with these homes, if there's no one living in your property, it doesn't perform. So I always look for my A-class market specifically for an area that's growing like Dallas is, because it's so easy to get these properties leased out and to keep them rented, Keith.
We're interested investors. We're not interested in buying a trophy property, so it needs to be occupied with a tenant. And that inventory is becoming awfully difficult to come by because you as an investment company, you're dealing with both owner occupants that are moving there and want to own the home that they live in. And you also sort of have a cap as to how much you can pay. You can't pay too much or else it would no longer be profitable. It would no longer cash flow for an investor. So how do you go about doing that? How do you go about getting control of inventory in a hot market, and where do you find the deals?
Well, that's a great question too. And it's been harder and harder each year. We started in Dallas, Fort Worth back in 2012. So we've been in the market now for going on 5 years. It's just been more and more difficult each year to get properties that make sense, right? Because, hey, we can get homes out there, Keith, but are they going to work for our investors from a return standpoint? And right now, my investors are looking for, cash on cash returns at about 7%. They feel comfortable with that with an A-class property. So I really have to make sure, even though I'm getting these great properties in great neighborhoods and they're safe areas and we're able to attract really solid tenants, if I can't present a deal to my investor that spins off a yield of at least 7% on a cash purchase, it just doesn't really make it a very attractive deal anymore. With that being said, we've been in the market, like I said, for 5 years, buying cash and buying consistently, right? As many properties as we can. Every month, I'll buy as many as I can in a market like this. So we built some really good relationships with some banks, REO agents, short sale agents. We get a lot of pocket listings, so it's just we got to fight tooth and nail. And then the auction only comes once a month here in Dallas. It's Super Tuesday. So my acquisitions team, who's my real all-stars of this business, are out looking at properties, driving properties. They'll drive 40, 50 homes just to see that only 10 of these properties even show up at the auction. And then out of those 10, we're bidding on every one. And we're lucky if we get, this past month, Keith, I only got one. So that just goes to show how hard it is to get properties in this market right now.
You as an interested investor, you basically really need somebody at the front of the line and knows how to get at the front of the line to get product in a competitive market. So that's really another use of leveraging John and his company and his team and his local market knowledge. Why don't you just talk a little bit about, John, about why properties aren't just out there publicly listed on the MLS, on the multiple listing service?
They're out there. They just don't really make sense for our model and for, they don't fit what our investors are looking for. Currently, properties on the MLS in Dallas, they're priced very high. They're not good deals, but they're still attractive deals for an owner occupant. Someone who plans on living in the house themselves and purchasing the house, they're willing to pay a little bit more for the home. But that doesn't make sense for our cash flow model, for our rental property model, and it doesn't meet the requirements that my investors are looking for. So to still find good deals out there, we're lucky, like I said, that we've been out here buying for cash for 5 years. Cash is king, consistency. Agents always want to see that. So my guys that work directly with the banks and are able to get these foreclosed properties and things like that, we're one of the only players out here that can really get those homes. And those are the only ones that really make sense, Keith, if that makes sense.
Yeah, now owner occupants, they're the types of people that can pay virtually whatever they want for a home. They can even pay more than an appraised amount if they want to, because emotions get involved. So here we need to deal with facts so that the numbers work for both you and work for an investor. So does one find owner occupants at all at the auction?
Actually, we do. There's hedge funds, there's REITs down here, there's some competitors of ours. We don't have too many competitors in Dallas-Fort Worth, believe it or not. I just think it's because of the fact there's just not enough properties to go around. You will find owner occupants at the auction as well. You also find small outfits that are just looking for, retail flip deals, guys that will go in and buy properties in more upscale areas of Dallas, get them priced low, go in and do a really high-end renovation and sell at the top of market value on the MLS.
So tell us about the exact product type that you're looking for there in a hot market like Dallas in order to purchase, renovate, and provide to an investor where the numbers will make sense. Just tell us a bit about that, bedrooms, bathrooms, and so on.
Yeah, so I'm looking for at least 3 bedrooms, at least 2 bathrooms, 2-car garages. We're very particular about the areas that we buy in. It's very important, properties, where they're located, the amount that it'll rent for. It's very, very important in terms of what type of tenant that property is going to attract. So we always have that in the back of our mind. I really prefer to deal with properties in the Dallas market specifically that rent for $1,200 and above. Average rents that we're looking at here in Dallas are about $1,600. All my tenants need to make at least 3 times that monthly rent to move into any one of my properties. So you're talking about tenants that are really right in line with the median income here in Dallas, which is just under $60,000 per year. That's true middle class here in Dallas. These properties that we're attracting, I want to attract those type of tenants because it just ends up being a better investment for everybody involved, us, our management team, and our investors.
Yeah, that better class of tenant is most likely going to take better care of the property over the long term. And when you as an investor are looking at your profit and loss statement, that's really something that you want to go ahead and consider when you think about the long-term cost of improvements. And when a tenant lives in these high B grade or even into A grade properties that John's company is dealing with, they're happy about where they live. They like the neighborhood that they're in. They're more likely to like the school district they're in. They're more likely to stay longer. And as we know, vacancy and turnover are one of your biggest expenses, so that's really something that you want to consider when you compare this market to other markets. So John and I have been talking about the acquisition, and following acquisition, it's really up to John's company to make smart improvements, strategic improvements for you, what I'm going to call investor grade improvements. Now, I visited this market 3 months ago, and John toured me around the area, and we took a look inside quite a few nice single-family homes that they had prepared for investors. We looked at some submarkets in Seagoville and in Lancaster, Texas. These are areas just south of Dallas. And you'll see John and I in that video, we walk inside a turnkey brick-faced single-family home in a great neighborhood. And John and I walked down the hallway through the living room and into the kitchen. And when I talk about investor-grade improvements, for example, the countertops in that kitchen that you'll see us in the video, you see good-looking, shiny, epoxy-coated kitchen counters. Okay, that's investor-grade improvements. That's a smart improvement. Now, if you look on the low end, what if the countertops in there were grade C plywood? Okay, what type of tenant is going to be attracted to something like that? And that wouldn't even fit in with the character of the neighborhood. But now on the other end, if you go above investor grade, what if they had renovated with luxury quartz countertops? Well, in that case, a tenant could only afford to pay or only would pay maybe $50 more per month for those countertops than they would with the epoxy coated. But see, you as an investor, that might increase your mortgage cost so much because your purchase price is higher that you might have to pay a mortgage of $100 more, even though you only got $50 more rent for a tenant. So now you're minus $50 on your monthly cash flow, and see the numbers begin to not work for you. So you want to look for a company that makes the right investor grade improvements. We're talking about words like durable, functional, and quality, but we don't want to talk about things like luxurious or opulent. You might want that in your own home, but as an investor, when you try to do words like luxurious and opulent, that's when you begin to lose. Tell us some more about the quality of the investor grade improvements, just typical improvements after you acquire a home, what you do to it, and just what those materials and features look like, John.
Yes, so everything that you just said is spot on. When it comes to investor grade improvements, we're not going in and replacing the countertops and putting in granite or quartz. It just doesn't make sense because it's not going to really make the property rent for that much more. So instead we go in, we do an epoxy coating over the countertops, which one, it gives it the look of granite, but it's durable. And if the tenant scratches it or, leaves a hot pot on it or something like that, we can just go in on a turnover and just re-epoxy that countertop and it looks brand new. So we do the same thing with the flooring as well. We don't put in, brand new hardwood floors. We do, and it's a vinyl plank flooring. It has the look and feel of wood, but it's not as expensive. So if a tenant damages that, whatever it may be, we can just go in and just replace some of those actual vinyl planks and not have to replace the whole floor or refinish the whole floor. So the idea is to renovate a property to where it looks really nice and really appealing to a tenant, right? Everything looks new and fresh and clean. But then if that tenant moves out, we have to go in and conduct a turnover. We want to obviously keep costs down for our investors because we want these properties to perform at their highest and best.
Yeah, there is a sweet spot there. So it's not just the investor grade improvements we're talking about here. It's really the fact that you are tailoring your product toward the type of investor that's a busy person that lives outside Dallas, toward the type of investor that's not going to fly into Dallas, go to the nearest Home Depot, strap on some knee pads and install a sink drain or place vinyl flooring planks themselves. That's not the type of person that you're looking for. This is called a turnkey service. So just tell us more about your turnkey philosophy.
So what we believe with this turnkey philosophy is something that we call in the office as white glove service for our owners, for our clients. And the idea there is that we don't want our clients to have any problems, issues, questions. They don't necessarily live in Dallas. I have clients that are Australian, right? I have clients all over America. And when they come in and invest with my team, it's all about the team first, Keith. I mean, I'm positioning my investors in some of the hottest markets in America because I want them to be able to buy really great investments that work for them, but it's also the team behind those investments to make sure that they perform at their highest and best. And we are that team. So it starts with the acquisition process. We don't buy anything that we would not invest in ourselves. American Real Estate Investments owns every one of their properties. We do not wholesale any properties. So we're not going to buy something that, we would be stuck holding the bag on, right? We want to move this inventory, so we only buy properties that we would buy ourselves. From there, we're going to renovate each home, and you've been in our properties, so you've seen that they all have a very standard common theme in terms of the quality and the style of the homes. And then at that point, we're going to transfer the property to our property management team, and we professionally manage all these homes for our investors. And we even have, a customer service rep, an aftercare sales rep that will be your direct point of contact when we sell this property, when we transfer this property to you. So I don't want you to have 5 different phone numbers to call for 5 different things regarding your property. I just want you to have one quick, easy person that you can call or email that will give you updates on every one of your properties, no matter where they're located, because we're in 4 different markets right now. So I think that that's a really beautiful thing, and I think that's why, a lot of our investors keep coming back.
And Dallas is just one of your 4 markets, although most of your activity is there and you're based there. And you recognize something with your operation a year or so ago that made you want to go ahead and bring management in-house rather than outsource it. Tell us about that and the advantages that brought you.
With management, we used to rely on a third-party management company to manage our homes in Dallas, Fort Worth, and even in Missouri. And I just quickly learned that in order to provide my clients with the same level of customer service that they expected from us when they first talked to myself or one of my investment coordinators, I had to bring everything in-house. And even with the property management side of things, it's better for our company as well to manage the homes because we really know what's going on with every property and every tenant. And that's exactly what my investors and my owners are looking for.
When you have management in-house, you kind of have that face-to-face, kneecap-to-kneecap interaction with renters and tenants where you really get an idea of what they want and just what your customer's demanding, because ultimately, as investors, that's who our customer is, and you're able to better serve them.
Exactly.
You're listening to Get Rich Education. Our guest is John Larson. We're going to come back with more. I'm your host, Keith Weinhold. Are you looking to invest in your first investment property or grow your existing inventory? Highlands Residential Mortgage can help, offering down payments as low as 15% and credit score requirements down to 620. Their streamlined process is designed to help investors close their loans quickly and without any surprises. You need someone who knows cash flowing real estate and can help guide you through the muddy waters of today's lending environment. So call Graham Parham today, toll free at 855-326-6802. The Parham team can help you purchase or refinance any of your 1 to 4 family investment properties.
NMLS number 195724, 12001 North Central Expressway, Suite 750, Dallas, Texas 75243. Equal housing lender, not licensed in all states.
As a lot of investors know, multifamily real estate has been one of the best asset classes to be invested in most of the last decade. While the great deals have been harder to find lately, there are still opportunities in select markets where savvy investors can get lots of appreciation and strong cash flow if you have a great team. Dave Zook, founder and president of The Real Asset Investor, and his team have been very active in the multifamily space in Memphis, Tennessee. On the heels of the Great Recession of 2009, Dave and his team quietly started acquiring multifamily assets, and in the last few years, he has syndicated over 2,000 apartment units, creating strong cash flow streams and big appreciation for lots of their investors. It's not too late to get involved. If you're an accredited investor and you would like to learn more about investing in great multifamily apartments with a world-class team, email Dave and his team at info@therealassetinvestor.com.
This is the Real Wealth Network's Kathy Fettke, and you are listening to the always valuable Get Rich Education with Keith Weinhold.
Welcome back to Get Rich Education with our guest from American Real Estate Investments in Dallas, Texas, Managing Director John Larson. So, John, one of the advantages that a turnkey company has there is that you're able to do your work and your renovation work at scale, where a do-it-yourselfer from out of the area, not only do they not have to do that, but they wouldn't really be able to realize the economies of scale that you can. So the fact that you continue to bring in inventory, even in a hot market, means that you can have one dedicated contracting team for the long term, and you can keep them at work, and there are not lulls, so you can keep them busy at things and retain them. So just tell us about some of those advantages that having dedicated contractors bring you.
Yeah, it's great. I mean, they've done hundreds of homes for us in all of our Texas markets, but Dallas-Fort Worth specifically, yeah, these are the same crews that we've had since 2012. We buy everything in bulk, right? The flooring, the carpeting, the paint, everything's in bulk, so we keep costs down there. Then also, these guys have done so many homes for us, and a lot of these homes are kind of in the same neighborhood, same style of home. So they can walk a job, really, and just be able to give me a bid right there on the spot. That's great, too. It's awesome to have the same in-house crews because they know what we're looking for. You know, I still have a general in each market that follows up to make sure that everything was done correctly. But these guys working with us for 5 years, they're really on the ball. And then on the flip side as well, when we hand the property off to our property management team and there's a maintenance issue or something like that, I have my own in-house crews, the same guys that renovated the property, that go out and perform our maintenance also.
So they already have familiarity with the property, and that's a real advantage when you have that contractor maintenance interface like that.
Exactly, and that's how we keep costs down as well. And there's times where these guys, maybe they feel like, oh, well, I might have missed that on the rehab or something, and they'll go out and fix it for free. You know, the whole idea here, and that's why I love to manage the properties myself, is we keep costs down, keep maintenance costs down. That's the way that these properties perform.
Right. If the renovation company and the management company are completely separate, if something's missed in the renovation and then the maintenance company feels like they need to do something that the contractor should have done and the contractor missed, that's where we get into a finger-pointing situation, and that's where we have problems, and that's what's being avoided here.
Exactly. And the idea is not to nickel and dime our owners. We want our owners to get that rent check, you know, deposited in their account, direct deposit every month. That's the idea here. And we don't want them to see their statements every month from their portal and say, oh, what's this? What, another maintenance charge? That's not what I want here.
Yeah, and that's not what investors want either. Well, you know, before we talk a little bit about that interface with how it feels to be an investor in your product and that communication that they get, just talk to us about the latest numbers, kind of what is the typical purchase price and what is that ratio of rent income to purchase price on your great grade properties there?
Yeah, so average sales price to my investors right now is about $170,000. And that's for a nice, solid middle-class property in a great area here in Dallas. And the average rents are $1,600. So we're almost right at that, 1% gross rent multiplier that everybody's looking for. But obviously in a hotter market and buying in better neighborhoods, it might be a little bit tougher to achieve that 1%. But I'm telling you, in the long run, the property performs so much better.
Yeah, in these neighborhoods, which are actually some of the best grade neighborhoods I see for single family properties where you can still get cash flow, you do have this off-street parking where a lot of these homes have garages. You do have a lot of these nicely manicured lawns. You have the garbage cans pushed back. You have brick-faced homes. And the thing that makes the inventory in your market different is the year of construction is just so much more recent than you find in a lot of other turnkey markets.
Yes. Dallas, we have a lot of properties that we acquire that are year 2000 builds and above. Really my cutoff is kind of 1980. I really don't purchase much that's below 1980, but you'll see it's a common theme with my inventory that I have in Dallas-Fort Worth. A lot of year 2000 builds and above.
So us as investors, we are interested in getting that regular deposit into our checking account. But, we're also concerned with what I like to call getting a high return on time invested and kind of having what I'd like to call frictionless interfaces with an investment company when we buy as an investor. So can you just tell us more about the investor portal and the communication that we can expect there and just about the one point of contact that each individual investor is assigned when they buy?
Yeah. So number one, every investor is going to get an online portal where you can go on and you can see your property management statements each month. If there was some maintenance performed to the property, you're going to see a bill on there that backs up, that maintenance charge. With my aftercare reps here, you're going to be assigned one point of contact, like I said. So each month, this aftercare rep is going to be reaching out to you and just touching base and saying, hey, is there any questions or any concerns on your statements or anything like that? If there is a problem, a high maintenance cost type of issue, or, if a tenant's late on rent or something like that, our aftercare reps are instructed to reach out to our investors immediately. And we don't just come to you with a problem, we come to you with the solution as well. So, if there's something going wrong with the property, expect weekly updates from your aftercare rep. If everything's going smooth and, in my Dallas-Fort Worth market, I'll tell you what, 99% of the time things are going smooth. So you're probably only going to hear from your aftercare rep once a month.
Now, that's really valuable to hear a property management company come up with a solution for an investor whenever there's a problem. So can you just go ahead and give us an example of, not just presenting a problem when it comes up every once in a while to the investor, but proposing what the solution is?
There could be a time where a tenant pays rent late. Instead of going right to my owner and alarming him and saying, hey, the tenant's late and, we might have to file eviction. No, I'm going to reach out to this tenant first. I'm going to find out why they're late. What is the reason? Because with my A-class inventory in Dallas, the tenants that we're attracting in these homes, they're not really people that pay late or don't pay. So there's usually a justifiable reason as why this rent is late. So for one example, there was a person who just was out of town, out of the country, didn't pay the rent. Definitely planned on paying the rent as soon as they got back, but for whatever reason, couldn't get access to a computer or their portal to pay the rent. So in that case, reach out to the tenant first, came up with a plan of action before I called the owner. And we just let the owner know, hey, I know you didn't see your disbursement. I talked to the tenant. They're late. They were out of the country. They're paying. We just settled up with them. You're going to see the rent on this date. And then just follow up with them to make sure that they've seen it.
Well, this business is about following where the jobs are going to be and following where the tenants are going to be. And we've seen fantastic population growth, business growth, and job growth there. And one of the ways you, as a listener, can follow along with the money is to go ahead and attend a tour that John's company is putting on. John, walk us through the tour.
Yeah, so we do these twice a year. They're usually 20 to 40 people. I never take more than 40. I just feel like that group is going to just be too large. But what it is, it's not just a property tour and, we're showcasing properties for sale. It's a workshop as well. So you're going to meet with my acquisitions team. You're going to meet with my investment coordinators. You're going to meet with my property management team. We're going to introduce you to some of our lenders. There's going to be a lot of industry experts there that are going to be able to answer a lot of questions for you, show you how we acquire homes in a hot market, show you how we properly renovate properties from a rental standpoint. And then you're going to just be able to pick my brain and my investment coordinators' brains as well. I mean, that's their job. They help investors all over the globe with identifying good rental properties for their portfolio. So I think there's just a lot of knowledge and there's a lot to learn on this trip.
Yeah, John, we'll tell our listeners where they can go ahead and find out more information about you, more information about the tour, and where they can see that video of you and I, where you're walking me through those homes in the Dallas submarkets.
They can find us at getricheducation.com/Texas. And I believe our video is on there from the Dallas tour that you and I went on.
That's right. In that video there at getricheducation.com/Texas, you can see John and I touring their offices, driving around Dallas, touring submarkets, and walking through turnkey homes together. John Larson, thanks so much for coming on to Get Rich Education.
Keith, it was a pleasure. Thank you.
Yeah, big thanks to John Larson today. John's a savvy guy. He's highly transparent, too. In fact, you'll see him at a lot of the National Real Estate Investor Conferences, and he really knows how to put his investors first. You'll meet him in person on that tour. In fact, his company is growing so fast that later in the day after he visited with us here, he had another prospective new hire to go interview. So as their company adds investors and inventory, you want to see that your provider is growing to keep up with that. You really get a better quality of tenant in these properties. Some of the tenants might even have a credit score of 720 or better and an adequate down payment, but a lot of residents are transplants to that area, and they're just kind of testing how their life is going to work out there for a few years before they might decide to buy. The average tenancy duration there is nearly 3 years. Those field trip dates for that tour that John mentioned are April 21st to 23rd in Dallas, Texas. That's just 3 weeks away. So you'll want to act now if you want to tour, frankly, what are the best looking cash flowing turnkey single family homes and neighborhoods that I've ever visited. Now, just like a good looking girl can make us guys do irrational things that we regret later because we put feelings before facts because we couldn't think straight when she was around, well, in the same way, a good-looking property, that's something that gets people excited, especially if you live in a high-priced area like Metro New York or coastal California, and you get all tingly because you see how you can get a good-looking brick home in quite a nice neighborhood for, say, only $170,000 there, or even less. I just want to remind you to keep emotions out of it. Investing is about facts, not feelings. Although it looks fantastic in Dallas, appreciation can never absolutely be counted on. Your numbers have to make sense. Positive cash flow is your rent income minus your mortgage and your VIMTIM. If you're a new listener and you haven't heard me use VIMTIM, that's the little acronym that's an easy way for you to remember your monthly recurring non-mortgage expenses. That's VIMTM, VIMTIM. It's vacancy, insurance, maintenance, taxes, and management costs. So with down payment and closing costs, be mindful that you're going to put up $40K or more of skin in the game here. And congratulations, you've hopefully locked up a cash flowing property in one of the most stable and fastest growing metro economies anywhere in Dallas-Fort Worth. Start by watching that video of John showing me their properties and get all the contact details and more info about their upcoming tour. We'll send all that to you once you land there at getricheducation.com/Texas. That's in the show notes for you. Until next week, for my developers, John Collins and Marcus Whelan, sound engineer Vidran Jampo, designer Nikon Roy, I'm your host, Keith Weinhold. Don't quit your daydream.
You've been listening to Get Rich Education, telling you what the wealthy won't tell you about real estate and investing.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
Cash flow real estate investors nationwide and worldwide, this is Get Rich Education's Keith Weinhold. Forbes has rated Memphis, Tennessee as the #1 cash flowing market in the world. Our good friends at Mid-South Homebuyers have been Memphis's premier turnkey real estate provider for 14 years with a stellar reputation and an A+ rating with the Better Business Bureau. Owner Terry Kerr was born and raised in Memphis. Yeah, he knows the market and has renovated and sold over 1,000 houses in the Memphis area. Find out what their many repeat buyers already know. Their houses are completely renovated, even come with a 1-year builder's warranty and a lifelong rental guarantee. They're a perfect fit for the first-time out-of-state investor or the seasoned investor diversifying their portfolio. Mid-South Homebuyers' friendly staff makes investing easy. Learn more at midsouthhomebuyers.com or give them a call at 901-217-HOME. The preceding program was brought to you by your home for wealth building, GetRichEducation.com.